친애하는 국민 여러분.
I hereby declare an emergency martial law in order to defend the Free Republic of Korea from the threat of North Korean communist forces and to eradicate the shameless pro-North anti-state forces that are depriving our people of their freedom and happiness. This measure is necessary to safeguard our constitutional order of freedom.
South Korea's president stunning his party, the nation, and the world by declaring martial law in a high-stakes political gamble. Yoon Suk-yeol has now lifted the decree just a few hours after it took effect. But the shock move sparking protests in Seoul as soldiers were deployed to the National Assembly, where lawmakers demanded Yoon reverse his decision in a dramatic late-night vote. Seoul stock market set to open as usual after Korean assets take a hit worldwide. The finance minister, central bank, and regulators calling emergency meetings. This is the Asia Trade. Stay with us as we bring you all of the developments from Seoul and also the global reaction. I'm Sherry An in Tokyo.
I'm Heidi Stroud-Watts in Sydney. We will be tracking all of the market reaction for you as well as Asia wakes up to some truly extraordinary developments, Sherry.
And really, the reaction in the markets was swift, right? I mean, we cannot emphasize enough how significant of a move this was, not only because this was the first South Korean president to declare martial law since the military dictatorship, but because of that painful and bloody past of South Korea's path to democracy. So you saw the market reaction being pretty swift. You're looking at the ETFs related to South Korea taking a big hit. The Korean won, in fact, at one point falling to 2009 low, but it did pare some of those losses on the pledge of unlimited liquidity by regulators. We're still talking about 2022 lows, though. And the Bank of Korea will hold a board meeting in about an hour. We heard from the finance ministry as well. South Korea will take all possible measures to stabilize the market if needed. Treasuries at one point even rose on that safe haven move. Bitcoin also took a hit overnight as we saw those declines even more pronounced in the South Korean exchanges. But take a look at how the setup is looking, because U.S. futures unchanged at the moment. People were sort of on the sidelines given all of these rising tensions in South Korea. Right now, not a lot of movement for Nikkei futures either, but the Japanese yen headed still towards that 149 level against the U.S. dollar. We continue to see a lot of strength in Japan. We are now watching the offshore yuan as well, because we fell to that one-year low against the U.S. dollar, given that, of course, we do have that ban on export controls on semiconductor technology to China, and Beijing also retaliating. But really right now, the focus on South Korea, where President Yoon Suk-yeol says he will follow the decision of lawmakers who voted to nullify his martial law order. Take a listen.
바로 국무회의를 통해
I will accept the Parliament's request and lift martial law through a cabinet meeting. However, although I immediately convened a cabinet meeting, the quorum for resolution has not been met due to the early hour. So I will lift it as soon as the quorum is reached.
Our Asia security reporter Alistair Gale joins us now for the latest. And Alistair, I mean, this is being perceived as a political stunt, but in itself, as I said, that path to democracy was so bloody and so difficult for South Korea. And you know that well. You were there for ages in Seoul as well.
That's right. I mean, this is really remarkable events overnight in Seoul. As you say, you know, Korea is still a young democracy. It's fought its way to democracy from military dictatorship. So I think, you know, for many people in Korea, this brought back some of those memories of tough times in the past. You know, we've seen the soldiers in the parliament building. This kind of like crackdown on democracy is really remarkable in this day and age. And, you know, in a country, South Korea, which is, you know, a close US ally, it's seen as, you know, one of the leading voices in the world for kind of freedom, for the rule of law, and for the president to make this kind of move is really a stunning turn of events, and also how quickly he was rebuked by the parliament, and, you know, how now he's lifted that order.
To try to ban political activity, to try to censor the media, this is really huge when it comes to, as we're discussing, the democratic movement that we've seen in Seoul. But now it's going to continue because the opposition is calling for President Yoon Suk-yeol to be removed.
Right. I think we're looking at a period of instability now in South Korean politics. Obviously, this has backfired badly for President Yoon. As you say, the Democratic Party, which controls the parliament, now wants him to step down. He has to face that question of what is his political future? Does he resign? There's a very real possibility that he would be impeached and forced to step down, and we may have a presidential election in South Korea earlier than it's scheduled in 2027. So many questions now for President Yoon, a period of instability. It's going to be kind of worrying times in South Korea.
Yeah, Alistair Gale here, Bloomberg Asia security reporter. And of course, Heidi, as we continue to watch the market reaction and of course the economy, given South Korea's importance when it comes to the global supply chains, given that it's such a big exporter.
Let's, Sherry, bring in for some more analysis. Global Data TS Lombard, Head of Asia Research, Rory Green, joins us out of London. And Rory, we appreciate you staying up, but of course there's a lot to watch, late into your evening hours. But when it comes to how you view this and how markets potentially view this, is this sort of a whirlwind, sort of whiplash, one-time jolt of volatility, or does this suggest that elevated volatility is something we need to be careful of going forward?
Yeah, I think we need to be ready, Heidi, for a period of extended volatility, with particularly the won likely to be under pressure. I mean, already we have the Trump factor and the China trade competition, some idiosyncratic Korea Trump risk through the IRA, which has been a massive beneficiary for Korean companies, and then the domestic economy weak, and the BOK on a rate cutting cycle. So the won, I think, is in for a tough time for at least a few weeks while we see the domestic political situation start to stabilise and perhaps move towards this impeachment, which I think is quite likely, and eventually some clarity on the future of President Yoon.
Well, as you sort of characterise it, this might just be the spark of a cycle of political uncertainty, right, with a potential impeachment, then leading, of course, to another election and perhaps changes within that government as well. How critical is it for confidence to be maintained here, given, as Sherry mentioned, how externally vulnerable the South Korean economy is, but also how, systemically key it is at a time when trade tensions are almost guaranteed going into next year?
Yeah, absolutely. A critical node within the global economy, notably the semiconductor side, SK Hynix, Samsung, key providers of AI-related memory chips, which is very important at this stage of the cycle. But right down the value chain through to steel, ships, Korea is a key part of the global manufacturing cycle. So it's absolutely crucial for stability to be maintained. And not only from the manufacturing side, but also geopolitically with, of course, North Korea, China, Russia, and the spillovers potentially from North Korean troops in Ukraine, still as yet unknown for what it means within the wider Asia context. So political stability for Korea, absolutely crucial.
And it just comes to show how much these political tussles can impact financial markets, right? I mean, we have seen this swift move when it comes to Korea-related assets overnight. And we're also watching a similar sort of collapse of government potentially unfold in France. We have a no-confidence vote there. The Philippines also struggling with its own issues when it comes to political violence as well. How closely are you watching all of these political wranglings around the world, and how big of a threat are they going into 2025 when we're seeing more real assaults on democracy in a way, especially when you have a more volatile Trump administration also coming in?
Absolutely. This is a critical factor that something that the markets find very hard to price. Political risk is in many cases binary. It's very difficult to price until it becomes, in your face, as it has done today in the Korea situation. Clearly now, with inflation high, there is a very strong anti-incumbency bias globally. We've seen this in a number of elections, and that is going to persist well into the 2025. I think Korea could see a relatively quick resolution compared to, say, some of the European issues that you mentioned, Sherry Ann. So it's definitely a key factor globally, and not least within China, where these issues are less visible from a protest and a vote standpoint, but perhaps a more important factor in the policymakers' reaction function. You can track the number of protests there, and this is one of the factors we think that is pushing China towards an outside fiscal response in 2025. So, very important for global markets across the world, particularly in Asia, with China and Korea being top of our list here.
We're looking at the iShares MSCI South Korea ETF trading in Australia right now, and we're seeing the lowest levels in a few weeks already. What will be the key transmission mechanism and the fastest to unfold given these political geopolitical risks around the world, Rory? Will it be through the currency mechanism, and how much more difficult does that make the jobs of the central banks around the world?
Yeah, I think it is mainly the currency, and it does pose a really challenging situation for these central banks. If we take the BOK and Governor Li Changyong, for instance, the one already becoming a bit of a political issue before today's incidents, the one under pressure from a domestic macro standpoint, higher rates hitting property, hitting consumption through variable mortgages, the Trump tariff factor, as I touched on, and then also this structural push through the NPS, the National Pension Fund of Korea, reallocating in quite a significant way away from domestic assets to foreign assets. So the structural drive to won depreciation. So the BOK was already in a very difficult position managing the won, trying to prop up the domestic economy. And that's been complicated, to say the least, by today's events. So the currency clearly an issue for the BOK. I think this puts them on course for probably another cut, maybe in early January, as they try to regenerate a bit of momentum back into the economy. China too, similar issues with a political directive to maintain a strong RMB, which is directly at odds with the monetary policy needed to support growth within the economy and to counteract potential Trump tariffs. So within the region, the currency dynamics at countercurrents to the politics, and that is going to be a key dynamic to watch through 2025.
So many cross currents for potential risk and volatility into next year. Rory, we really appreciate you joining us late as it is for you. Rory Green from Global Data TS Lombard there. We'll also have ongoing analysis when it comes to the changing situation in South Korea throughout the course of the day. And this morning we'll be speaking a little bit later with the former Trade Minister. And ahead of that, we'll also be hearing from Stimson Centre Senior Fellow Rachel Min-Yong Lee. Turning to some of our other top stories, and as Sherry mentioned, of course, political risk and volatility on the other side of the world. And French President Emmanuel Macron says he thinks the government can survive a no-confidence vote. Marine Le Pen's far-right party is expected to join forces with a left-wing coalition later on Wednesday to topple the administration. For more, let's bring in our Bloomberg Europe, Middle East and Africa News Director, Rosalind Matheson. And Ros, is this Macron being realistic, being hopeful, sort of, blustering and sort of a bit of gamesmanship to try and hope and a prayer survive this vote?
Well, it's interesting to see these comments because they're really the first by Emmanuel Macron through this crisis. He's not really been front-facing or driving the government action here. It's really been falling on Barnier, his Prime Minister, to do the negotiating and to wear the risk here. And so it's interesting in his first comments, he comes out to say he doesn't believe that this no-confidence vote will succeed. He doesn't believe the left and the right will truly unite to topple his government. And the question is, do the left and the right have one thing in common? Yes, they do, and that's that they really don't like this budget from the French government. And they really don't like what the Prime Minister Barnier is doing in terms of efforts to bring in the fiscal deficit by cutting spending, for example. And so the common enemy here is really, Macron and his government. And is that enough to bring them together? It does appear that will be the case with this no confidence vote on Wednesday. they do have the numbers to push it through. If they want, there'll be a debate and then followed by that no confidence vote. And really, it's hard to see at this point what is going to save this government. What can they do at this late hour to try and have the numbers in Parliament to get that vote through?
And even if they survive this vote, French assets are under pressure, right? What are the implications if this continues and Macron needs to rule with a caretaker government for months?
Well, either way, it's not good for French confidence and French market, because if the government does survive, they're going to have to make further concessions to do so. And that's concessions the markets don't want, because they're worried really about the structural picture of the French economy, that deficit blowing out. And they've already been concerned about the concessions that have been made so far. So that's the option if the government survives. If it collapses, obviously, you need to find who's going to be the new prime minister. Is that a prime minister who can bring the left and right together, who can get a budget through? And to do that now in this environment does suggest that even a new prime minister is going to have to make concessions to succeed with the budget. So either way, it's not looking particularly good from where the markets sit, and that's why we're seeing those widening spreads for French debt, for example, the French stock market all over the place, and even a bit of knock-on effect on the euro, that anxiety creeping into the broader currency.
There's also political upheaval when it comes to Germany as well, right? We spoke a little bit about the sort of, possibility that this is kind of more of a Euro-wide existential crisis. Does the weakening of the Franco-German axis and those economies and those political systems really play into that?
Well, it does. You've got two very big engines of the European economy, and you've got political upheaval in both of them at the same time. And the backdrop of that, of course, is that we've got an incoming US president, Donald Trump, who's threatening all sorts of things, including higher tariffs on allies and enemies alike. And he considers Europe to be a competitor when it comes to trade and investment. And you don't have a sense of strong European unity and cohesiveness right now when it comes to how to approach a second Trump presidency, and what can Europe do to counteract that on the trade and the investment side, and also on the security side. There are knock-on effects there also with wars in Ukraine, for example, and the conflict in the Middle East. So the idea that the engine of Europe, on the economic front, but also on the political front, isn't rowing, in the same direction, well, that's got to be a cause for high concern.
Bloomberg Europe, Middle East and Africa News Director Rosalind Matheson there. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're seeing when it comes to that move in won overnight volatility. Some of the expected volatility gauges already trading, and we're seeing won volatility really just surging now. The overnight implied volatility, as you can see on this terminal chart, spiking to the highest since the US election last month. And this even as we've seen some semblance of calm sort of trying to be restored with financial markets operating as normal in South Korea when it comes to financial and FX markets, stock markets operating as per usual. FX and overseas listed Korean stocks, so really showing some signs of stabilising. South Korea saying that it would provide unlimited liquidity until those markets have stabilised completely. But this, of course, as we're continuing to really process the market as well as political and ongoing risk implications of the South Korean president's surprise decision to impose martial law in the country for the first time in more than 40 years. And then, of course, the whiplash response as well, the swift reversal, of course, of criticism. And now looking at what comes ahead of potential impeachment, elections down the track, and just a great deal of volatility and uncertainty. Let's bring in now for the market view Elfriede Jonker, who's a client portfolio manager and investment specialist at Alfinity Investment Management. Frida, great to have you with us. And this, of course, at a time we're also seeing political upheaval in France, to a degree in Germany as well. What is the sort of best prism for investors to be looking at this?
Yes, I think we have been dealing with a lot of geopolitical risks over the last year already with the Middle East and Ukraine, Russia. And now this, I think, basically what it means for investors is just more volatility, more uncertainty, and something that you need to bear in mind when you look at investments to say how much of these sort of broader risks impact companies that I invest in, and should I adjust the valuation that I'm willing to pay for it or willing to keep it until a certain point. But so far it's been interesting. We haven't actually seen the markets reacting very aggressively to this. It's probably still early days for both.
Should we sort of steer ourselves for potentially a longer-term new normal of political uncertainty, particularly as we know next year when it comes to US foreign policy, trade policy, fiscal policy, it could all be quite different?
Yes, I think that probably is one of the biggest risks for next year. In our view is that we've already seen the Trump trade happening. So the market's pricing in a lot of sort of blue sky, we believe, at this point in time, with tax cuts, obviously tariffs still coming through. There's a lot of uncertainty. We don't know how it's going to play out. So what Trump is saying, it's really just the starting point of his negotiations. So I think throughout the whole year and probably throughout the next 4 years, we will have to deal with a lot of Trump, a lot of commentary from him, and changing his mind potentially throughout as well.
Given the external risks with the Trump trade, the potential tariffs, given the risks coming from the Fed easing next year, how would you assess South Korean assets today as we might see the impeachment proceedings of President Yoon Suk-yeol unfold if the opposition actually pushes this through?
Yes, I think these sort of things can definitely have a ripple effect through the broader sort of Asian economies and the world economies. It is, at this point in time, probably the 13th largest economy in the world, so it's not small. It will definitely, I think, cause a lot of sort of pause for concern to say, how will this evolve? I think if you look back at South Korea and the history of the previous sort of presidents there, they have a history of a lot of uncertainty and political upheaval as well. I think from an investor's point of view and our exposure specifically, we don't currently have any positions directly in South Korea. But if you think about the semiconductor supply chain, companies like SK Hynix and Samsung do account for the majority of high bandwidth memory. So that is something we need to bear in mind if you think about bigger investments like an NVIDIA and also the broader semiconductor supply chain. Where will you be impacted? I think at this point in time, it's really just too early to tell if this will have a bigger impact on the companies itself rather than just political uncertainty and implications for the government and the currency and so forth.
You mentioned semiconductors, and of course, tech has been a huge trade in 2024. But even when it comes to the broader global space, we are seeing this continued tit-tat between Washington and Beijing. Beijing now retaliating on that increased export ban when it comes to Chinese access to advanced technologies. How would you rate this environment right now going into 2025? Can you still see some upside in these tech names, especially around chips?
Yes, I think we have been invested in that space for quite some time. And NVIDIA, we previously had SK Hynix, we sold it quite a while ago. But I think the broader theme for us is that if you look at the Mag 7 and particularly big tech and the semiconductors, it's really been on the front end of the AI sort of evolution. And what we are seeing now is sort of moving towards that second stage, which is more infrastructure, companies like Apple benefiting. And then also of late, we have been adding on to the third stage, which is the services and software that sit on top, like a ServiceNow, for example. So we have been taking profits in some of those big semiconductor names over the last while. I think we need to bear in mind that, yes, the evaluations have run as well. And if you look at the expectations, they're still delivering a lot of earnings growth. But we just feel that it's probably time to be a bit more cautious and try and see if you can't broaden your portfolio out to other areas within that AI supply chain and also then the broader economy and sectors into next year.
And political fighting over budgets really about to potentially topple the French government as well, right? Which is pressuring the broader euro area. Any opportunities at this point that could pay off in the long run?
Yeah, so we recently, one of our investment team members went to Europe, and I think he came back and really felt that there were quite slim pickings across the board. If you look at the major drivers of those economies, France as well as Germany, a lot of the vehicle makers have been in a bit of a recession. They're really getting hammered on the luxury side, with China not doing very well. So we continue to do more work on opportunities within Europe. But the political uncertainty, particularly for a large economy like France, really does keep us a little bit on the sidelines. We want to see how this play out and how this will impact the equity market there. So we have Schneider Electric, for example, in our portfolios, but for the rest, pretty limited at this point.
Alfreda, always great to have you with us. Alfreda Yonko, who's a client portfolio manager and investment specialist at Alfinity Investment Management. More ahead here on the Asia Trade. This is Bloomberg.
I view the economy as being in a good position after making significant progress in recent years towards our dual mandate of maximum employment and stable prices. The labor market remains solid, and inflation appears to be in a sustainable path to our 2% goal.
It feels to me like rates come down a fair amount from where they are now. Just the inflation series is kind of my pet metric. It's the most important part is to look at inflation and not just the aggregate, to kind of break out the categories. And so my pet thing has been housing inflation.
Fed officials talking about the state of the US economy and the way forward when it comes to monetary policy. And of course, volatility and uncertainty really top of mind at the moment, not just when it comes to, of course, fiscal and trade policy going into the next year for the US, but also now just this extraordinary political volatility and upheaval that we're seeing across not just South Korea, but also across the Eurozone, in France as well. Take a look at how we're tracking when it comes to how markets are sort of digesting all of this, right? Even as we see the ending of martial law after its political gamble there by the South Korean president, we are still seeing that risk aversion being very much active in these markets. We're seeing Australian stocks down by just about 0.4%. Nikkei futures looking sort of modestly to the upside at the moment. We're seeing S&P futures looking pretty flat with a little bit of green there as well. South Korea, of course, regulators there pledging to open and operate markets as per usual as the martial law is lifted. All financial FX stocks markets are running as usual, and of course that pledge of unlimited liquidity until we see that further stabilisation of markets. And of course, you see that, for example, being expressed in the trading in the won, overnight implied volatility spiking to the highest levels since the US election last month. And Sherry, will be continue to kind of not just look for sort of the immediate morning aftermath, but what happens next, right, in terms of what the road forward will be. Is the impeachment sort of process one that we should be looking at the moment, and what that means for sort of political stability if we're potentially going down that route and heading to an election?
In fact, we could be headed down that road just today. Local media YTN now reporting that the Korean opposition party may be proposing that impeachment motion today. We have seen really the reaction coming from local media, from various outlets, including newspapers, talking about how President Yoon Suk-yeol should take responsibility for his actions. 동아일보 saying that the declaration of martial law actually really backtracks 40 years of democracy for South Korea, something that was achieved very, very painfully in the country. So we'll continue to watch the developments as we're headed towards the Korean market opens in less than half an hour. But let's bring in Bloomberg MLive strategist Mark Cranfield, who will give us a preview of what to expect, because we saw the Korean won plunging to 2009 lows, then rebounding a little bit again. But now if you have these impeachment proceedings starting, what does that mean for the currency?
Well, investors are obviously going to be a bit nervous, but the early moves from the Korean authorities, particularly the Bank of Korea, look pretty good. They're going to make sure that they're holding an emergency meeting today. They're going to make sure there's plenty of liquidity in financial markets in Korea. That applies to the foreign exchange money markets and to help the equity market as well. So all the right signals are being made by the people that matter the most, which is the people in control of Korea's financial markets. But at the same time, it's a case of be careful what you wish for, because over the past couple of years, they've been hoping to capture more of the Korean won trading outside Asian hours, which is a bit like the Chinese yuan as well. Yes. And they got their wish. Yesterday, the Korean won was the most traded NDF in the world. So #1 in the charts, but not for maybe the reasons they particularly wanted.
I was going to ask, so what is the importance of Korean assets around the world? Because we were talking about how Korea is important in the global supply chain context. But when it comes to financial assets, you said it, I mean, they're trying to make it more liquid.
Well, certainly they've captured everybody's attention. And although there's going to be some fallout from this, what they'll probably be hoping as well is it reaffirms the fact that some of these Korean markets are very big, they're very global. The Kospi has been underperforming since July. The market's not been doing that well. Valuations have come down quite a way. So actually, once the dust settles, it could be that global investors are back looking at Korea and saying, hey, there's some value there. There's going to be some short-term turbulence, of course. But if the authorities get it right, they'll stabilize the markets relatively quickly, and maybe we'll see some new inflows into Korea.
I mean, it was really interesting to see what treasuries also getting bid up because of potential volatility and safe haven moves, but also Bitcoin taking a hit, especially in Korean exchanges. But let's talk a little bit about the broader global picture, because this fight over budgets threatening to collapse governments happening right now in France. We thought that was going to be the biggest story this week. French assets, European assets under pressure, the euro as well.
At the moment, investors are taking a fairly sanguine approach. They seem to think France is going to resolve this at the last minute. If you look at even the spreads, the bond spreads, which is the biggest indicator in Europe, the spread between French yields and other parts of the European space, particularly with Germany, they haven't widened that much. They're definitely wider than they were a week ago, but it's not gone crazy. People were expecting 100 basis points already on the France-Germany spread. It's well short of that. And they have in the past. France have sorted things out at the last minute. Investors will be hoping so. If they don't, there's plenty of room for a lot of volatility. And the euro currency will be one that people are watching very closely. There's been some talk it should be closer to parity with the US dollar. It could happen very quickly. If the French government dissolves today, the vote is expected later in today, and there's no backup plan, this could happen fast. There could be a lot of volatility. The euro probably declines more, and probably French equities as well get hit even further. They're not doing too well, and they may decline again.
Even before the latest news about France, we heard from Amundi that we would hit that euro parity within the year end. But MLive strategist Mark Cranfield, always good to have you, especially here in the Tokyo studio. But let's continue discussing the political turmoil in France, because as Mark was saying, there might be a little bit more confidence that they might be able to resolve what's happening over there at the last minute. And perhaps that's also a little bit of the thinking by President Emmanuel Macron, who says the government may be able to survive a no-confidence vote on Wednesday. Joining us now is Simon Tormey, Executive Dean and Professor of Politics at Deakin University, who thinks risks to the European Union now look considerable. Great to have you with us. Simon, first of all, what do you expect on Wednesday with this no-confidence vote?
Well, firstly, really interesting comments by Mark there, and I think he's absolutely right. I think a certain degree of chaos is priced into the markets, but if this government dissolves, and I think it will, then I think we're going to have a very turbulent time in Europe. So I think it does look like the no-confidence vote will get up. Marine Le Pen, who, of course, is in charge of the largest party in the Assemblée Nationale, came out overnight basically saying she's instructing her deputies to vote against the government. We know the left's going to vote against the government, given that 2/3 of the seats in the Assembly are either on the left or the right, and Macron's got a small minority in the middle. I think it does look like curtains for Barnier. So we are going to have a period of considerable turbulence in France.
How could this then play out? Because even if we see the government topple, the President Macron has said in the past that he would not resign. He still needs to appoint a new prime minister. And of course, we have the budget to contend with.
I think if you're optimistic, you think this plays out basically that Macron goes back to the position that he was in June, July, when the election results of the last parliamentary election were known, and tries to peel away some people off there's moderates from the left bloc and some moderates from the right bloc to create a larger centrist bloc. And then maybe stick with Barnier or find another prime minister, probably go back to Gabriel Attal or maybe ask Francois Hollande or one of those sort of senior figures to step in. That's the optimist view. I think that more likely is that we're in a stalemate here, that Macron basically says, well, it's very clear that we don't have an operating majority of any kind in the Assemblée Nationale. We're going to have a technocratic government, which is basically going to roll through the budget from last year. This will not be at all popular with markets, but it will ensure that kind of minimal stability that you need in order to pay the wages of people, the police, hospital workers, and so on, and then to basically hold that in place with a long period of negotiation until you get to the opportunity to have parliamentary elections again in June next year.
Investors and markets have been fretting about these political difficulties for France for months, and there's also ongoing political upheaval in Germany as well. We've sort of talked a little bit about the potential for this as being sort of more of a European existential moment, right? Do you think that weakening economically, politically of that Franco-German axis really contributes to that?
Yeah, I think Europe's in a good deal of trouble, and part of the problem with this is, of course, that with Trump coming in, we've got the promise of tariffs, we've got an isolationist foreign policy potentially, we've got aggression from Russia on the eastern flank of Europe. It's a very low growth environment in Europe, as we know. UK's in a kind of world of pain as well. So I think that the markets are probably on the conservative side at the moment. I would expect that increasing bad news from France conjoined with very flat economic data coming out of Germany, Italy, Spain, UK travails continuing. I kind of think that it looks a bit optimistic in terms of levels of euro at the moment and some of those levels. I know the CAC 40 is down about 9% the last 6 months, but you could see that soften very considerably over the next couple of weeks.
And of course, we've been following what has been an extraordinary 10 hours taking place in South Korea as well, right, with the implementation of martial law and then the swift reversal. And I do wonder, as we see these pockets of political upheaval around the world, is there a sense that this kind of brinksmanship is kind of coming back into the fore as a favoured tactic? Should we be bracing for more potential political volatility globally going into next year?
Yeah, I mean, it's a bit difficult to look for safe havens at the moment, isn't it? I mean, you're kind of looking around, you're thinking, where is the best growth prospect? Where is the best place to put cash at the moment? And it does look quite jumpy. I mean, I think the South Korean situation will resolve itself over the next 48 hours, 3 days, something like that. It looks like a very kind of jumpy moment politically, but it does look like the signs are that some sort of normality will be restored. Europe is much more of a chronic issue, I would say, than South Korea or East or North Asia. So I think, there's a lot of worried faces at the moment, people who are heavily invested in the Eurozone and in European equities. I think that's where the kind of action is going to be. Whether the visit of Trump to France on Saturday does anything to restore a bit of confidence, I think is going to be one of those interesting things. If Trump comes forward and basically says, you know what, I don't see the prospect of applying very severe tariffs to the European economy once I'm back in place, and a moderating tone from Trump over the next couple of months would really help, I think, settle down markets and give investors a bit more confidence that some of that turbulence that is being picked up on the South Korean case, even the Australian case and so on, will help to sort of weather the storm as we come into his new tenure in January.
Simon Tormey, Executive Dean and Professor of Politics at Deakin University. Really great to have you with us this morning. Well, other stories that we're following, the US has sanctioned 35 oil tankers and ship management firms that it says play a critical role in transporting illicit Iranian oil to foreign markets. The latest sanctions package comes less than 2 months after the US broadened the scope of its curbs on Iran's oil and gas sectors after a ballistic missile attack on Israel. Indonesia says Apple has offered to invest $1 billion in its latest attempt to lift a ban on iPhone 16 sales. If confirmed, the latest offer would be a tenfold increase from Apple's prior bid. Indonesia has prohibited the sale of Apple's flagship iPhone, saying the company has failed to comply with domestic content requirements. More ahead on the Asia trade. This is Bloomberg.
Right, we'll be watching Korean futures as we head towards the market opens in South Korea. The finance ministry now saying that the markets will open as usual, as all authorities are taking all possible measures on the markets to stabilize them if needed. And this, of course, comes after overnight we saw those big moves with the Korean won hitting that 2009 low before reversing some of those losses, of course, after that ban, after that martial law decree was lifted. But at the same time, we continue to see the South Korea-related ETFs trading in Australia still down, and Kospi futures losing more than 1.5%. As you're seeing on that left side, Heidi, really dramatic photos of protesters outside the National Assembly clashing with police as President Yoon Suk-yeol tried to rule by the military, also ban political activity, also censor the media. Not surprising, local media now saying that the opposition party could be proposing an impeachment motion for the president today. And of course, what that means for the volatility in the markets is what investors are watching.
Absolutely extraordinary 10 hours, 9 or 10 hours or so that we've seen overnight, right? And a lot of Asian markets will be waking up and investors waking up and seeing this for the first time. We're also looking ahead, Sherry, in terms of the other reaction, the Bank of Korea's Monetary Board, which of course also just put through that unexpected key rate cut last week. They'll be holding an extraordinary meeting at 9 a.m. local time to talk about steps that might be needed to shield the economy and the broader markets. And as you mentioned, really the political leaders' future will be put to the test after this move, right, which caught even his fellow party members, foreign allies like the US by surprise. As you've mentioned, the opposition calling him to step down, and the party could propose the impeachment motion as early as today. If the party hurries up as much as possible, it can propose that motion today, report it to Parliament tomorrow, and that vote could actually happen 24 hours later. So that impeachment motion procedure could begin very quickly, depending on what decisions are being made today. So we continue to watch how the markets are reacting to this as this continues to play out. The volatility certainly is not over just yet. We'll bring you the latest on that as we get the details. But in the meantime, of course, we've been talking about some of the climate actions that we've seen lately with, of course, the wrapping up of COP29 and the plastics negotiations in South Korea over the past few days as well. And in China, decarbonisation efforts are in focus at the BNEF summit in Shanghai, which is underway. The country's 2030 target for peak emissions draws even closer. Beijing's been emphasising energy security in recent years by expanding both renewables and fossil fuel supplies. On day 2 of the summit, we take a deeper dive into some of the key sectors for that energy transition. Our APAC head of research, Ali Azadi, joins us now. So this is the 10th BNEF summit, Shanghai. A lot has changed since 2015.
Indeed. If I may go back to 2015, so we held the first summit just about a month before COP21 was set to start in Paris. At that time, the renewable market in China was booming, but still renewables were more expensive than building thermal power plants. And the combination of solar and wind at that time was only providing about 4% of China's annual electricity generation. Cumulative installed capacity was less than 200 gigawatts. Today, China is now set to finish the year at over 1,400 gigawatt of solar and wind, with a combination providing almost a quarter of annual electricity generation. And since the end of the last decade, solar and wind have been the most competitive energy generation technology in China, and actually more than half of the rest of the world. And of course, during this period, China has also emerged as the largest manufacturer of these technologies, as well as manufacturing electric vehicles and energy storage. And on the latter two also, it has become the largest market globally.
And this is all even before Trump takes over the White House again, and we are seeing China tensions with the U.S. worsening. So have you heard anything from the delegates about the potential impact of all of this?
So there's a cautious sense of optimism that despite the unfortunate rising tensions between the two countries, that on the Chinese side, there's still appetite for trying to find negotiated solutions if possible. At the same time, for energy transition specifically, there is this understanding among all the players that despite what may happen in the U.S., the pace of energy transition in China and the rest of the world is going to continue. One of the speakers, Zhongfang Li, who was one of the main players in drafting China's original renewable laws, he made a very good observation yesterday that even under the first Trump administration, emissions in the U.S. continue to decline, and despite some of the changes in policies, again, U.S.'s own renewable energy market as well as the electric vehicle market continue to grow. So despite the rhetoric, there's this sense that energy transition is here, and it's a foregone conclusion that it's going to continue building up momentum.
Bloomberg NEF head of APAC research, Ali Azadi, there joining us from Shanghai. We have more ahead on the Asia trade. This is Bloomberg. Markets in South Korea set to open in a few minutes. Our markets editor David Ingles joins us now. And Dave, you can see really Kospi futures accelerating losses. ETFs related to South Korea trading in Australia also seeing the worst day in 3 weeks. Now that we could potentially see an impeachment motion today, what are some of the assets that you'll be watching for the biggest reaction in the Korean market?
Yeah, well, I think it would have been worse, Sherry, were it not for a lot of the headlines which came through to assure markets that there will be ample liquidity. I think we can talk about the central bank in a moment. But to answer your initial question, we're looking at likely declines in the opening bell. In fact, I just had a glance at some of the prelim pricing across some of the biggest stocks there, Samsung Electronics, SK Hynix, and the like. And we are likely to see losses in the order of about 2 to 4%, give or take, given the current pricing right now. Now, apart, though, and I think we have to also consider that the markets did very well yesterday in South Korea, so there is that itch to scratch. And, you know, certainly with events overnight, and, you know, we're not done, I think, right? To your point, the impeachment is the next one to watch. I think it was Credit Agricole that put out that statement that when you look at the South Korean currency, that will be the next risk event. So while this chapter may be closed, it's a reminder that this is that the premium will perhaps remain over equity markets. And I think to your point there, right? So the Korean volatility, this is overnight. We're back to levels last month going into the U.S. elections. And the fact that the overnight gauge is actually accelerating quicker than your 1 week, 1 month, and 1 year does indicate, Sherry, that this might be hopefully short term.
So what's the real catalyst here?
The central bank, I think. I think they're saying that they're going to meet in a couple of hours or so. I think it's important to keep in mind that this might actually add further pressure to the currency. And the reason I bring that up is they cut rates 2 meetings in a row, and they opened the door for another rate cut for a third time over the next 3-month window. And I would imagine if this persists, that would perhaps make them lean towards more easing if needed, just to simply backstop confidence. Back to you guys.
Very own David Ingles there, as of course we do have in just a few minutes' time the central bank in Korea also convening for that meeting as well to potentially talk about whether any further economic support measures might be needed. This is South Korean markets opening as per usual after the lifting of martial law. Just has been an extraordinary 10 hours of political upheaval in the country. Well, the market opens in Seoul and Tokyo are next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens with all eyes focused on Korean assets after President Yoon Suk-yeol declared martial law. Not to mention that he reversed it just hours later. And of course, we are expecting a lot of volatility and uncertainty. But what a historic move. A local media, Heidi, calling this a reversal of 40 years of democratic achievements for the country.
Just a huge political gamble, and of course that swift reversal, whiplash for the markets and for political on-watchers, right? With some, including the likes of Tess Lombard Odier, saying that the impeachment process is really looking like it's inevitable. And we know that the opposition party have suggested that procedural sort of motion could get underway as early as today, with a vote coming in potentially the next 24 to 48 hours. And Sherry, we're also watching for the Bank of Korea in their board meeting kicking off at the moment, just right now, to see if further support measures might be required from their side.
All hands on deck when it comes to South Korean authorities, right? We heard from the finance ministry saying that Korean stock markets will open as usual, that authorities will put in place all possible measures on the markets if they're needed. We heard from the Financial Services Commission chairman also talking about steps to normalize financial markets. There you go. We're starting to trade in South Korea. The Korean won, in fact, seeing a little bit of gains against the U.S. dollar. 14.14 is the level right now. But this, of course, after the overnight session saw lows since we haven't seen since 2009 or so. We pared back some of those losses on pledges of unlimited liquidity by authorities. We have heard from them the Kosdaq index down 2% at the moment as the Kospi is falling 1.9%. And of course, we'll be watching very closely those big names in South Korea, especially semiconductor, Samsung, SK hynix as well. They're, of course, very intrinsic in the global supply chain context. The Korean 10-year bond futures also falling about 0.5% given the end of martial law. The key question right now, as Heidi, you alluded to, is what happens if we do see that impeachment motion put in place today and the wranglings around the political future of the Yoon Suk-yeol government as he tried to impose this rule by the military and ban political activity. So the Korean won now strengthening 1% as we're seeing those concerns that we saw in the overnight session being eased. In the New York session, we saw some big market moves, even crypto taking a big hit, and those declines being exaggerated on Korean exchanges. Let's actually get to the latest from Seoul. Bloomberg Sohee Kim joins us now. Sohee, sort of a sigh of relief in the markets right now.
Dramatic and shocking night to all of us here in Seoul. The market is a little bit like a mild reaction, I believe, like 2% down on Kospi, and then the Korean won is strengthening 1% against the U.S. dollars. But overnight, in some people's memory, this brought traumatic memories during the darkest period when the martial law was imposed like 40 years ago when the longtime dictator was assassinated. Well, most of us who have not experienced the martial law was scrambling to figure out what that means, how it will affect our daily lives. And as you mentioned, people try to log on cryptocurrency exchanges, and then the prices of crypto the tokens on Korean market was tanking, but it quickly reversed after the National Assembly made a decision to request the president to lift the martial law.
And, as Sherry was sort of mentioning at the top, what are we watching in terms of what happens now, right? Because we have seen really that expectation being set up that the opposition party will bring forward that motion to begin an impeachment process, potentially even today.
Right. I think both of ruling and opposition parties will try to go against Yoon's move to impose martial law, and it will be crucial to figure out the motivation behind this. It is still unclear what the president was trying to do with this decision, but he was truly beleaguered by a couple of issues. The approval rating was plummeting to around 17 to 19%, and the opposition lawmakers keep calling for a special investigation over the president's wife over corruption allegations, and government's budget proposal was in deadlock. So while the National Assembly members will try to impeach him as soon as possible, there will be some sort of investigations over the president couple and the political aides around him about the motivation and how they were trying to hide their corruption allegations.
What was interesting was that the White House was also saying that they weren't necessarily notified before the martial law was imposed. So you can see that the international reaction also wouldn't be that positive. And I'm just watching to see if there will be any moves also from North Korea that usually likes to take advantage of political instability in South Korea.
Right. It's actually the impeachment was not that old news for us. Like a couple of years ago, like 4 years ago, we experienced the impeachment of President Park Geun-hye, and North Korea at the time was, well, I mean, I try to remember what happened around that time, but they were trying to understand what it actually happened. And then they were going against the president, like slamming publicly on newspapers and their news agencies. But the situation is like widely different because they are now like cuddling with Russian officials around their the military decisions over the invasion in Ukraine. So this geopolitical situation is very shaky at the moment. But I've talked to professors about how this geopolitical situation will be unfolded through the couple of months. But I think right now people are waiting to see what's going to happen next in South Korea.
Our Bloomberg reporter Sumi Kim there in Seoul. Let's get some more market reaction to the ongoing political upheaval in South Korea. Our inside anchor Linda Armin is standing by with us in Singapore. Has.
Well, Heidi, joining us now is Carlyle's head of global research and investment strategy, Jason Thomas. Jason, good to have you with us.
Thanks for having me.
Some relief in the market. We saw how the Korean won has recovered about 1%, but it's really too early to tell. The next 24, 48 hours will be crucial in perhaps seeing how this might play out.
I think in the short term, but let's see what the Bank of Korea does. Let's see what sort of actions the FSC takes. I think there's a market stabilization element of this, the financial infrastructure. I'm very hopeful there. There's a longer-term political issue. I don't think that the politics is going to resolve itself for a period of months. And so the things are going to be very complicated. Of course, we would expect a high degree of volatility going forward. And of course, this could be something that actually accentuates what has been referred to as the Korean discount.
You talked about volatility that is expected to persist. What can the BOK signal to perhaps allay concerns in the market? What are you hoping to hear?
Well, I think that it's the liquidity provision on an almost unlimited basis and watching markets. So, you know, it's just a backstop that if markets are relatively well behaved, as we've seen this morning, then there doesn't actually need to be quite as much. But it's a backstop. It's a commitment to market participants that they will liquefy markets to whatever extent is necessary over the next period of months as the situation in the political side resolves itself.
Of course, we heard earlier from the finance minister saying that, the government is willing to mobilize all resources, all measures to ensure stability to the markets as well as the economy. Is that enough, encouragement for the markets?
I think so far so good. Again, if we were to open this morning, of course, there has been the announcement that the martial law has been rescinded. So that's what I think the market is responding to for the most part. But I think that it's going to be contextual, and it's going to be contingent on market behavior. It's going to be signs of increased risk aversion, capital outflows. So I think that it's just as long as there is a contingency in place for the full liquefaction of markets in response to some negative moves in market prices, in bonds, in the exchange rate relative to won dollar, I think markets will be, again, cautious. I think that there's going to be a elevated risk premium here for some time, but I don't think you need to see violent sell-offs, for example, as long as there's that commitment from authorities.
It's interesting because markets throughout the course of the year have been so sanguine when it comes to political and geopolitical risks, right? Amidst two hot wars, and you've got sort of ongoing concerns over what the fiscal and trade outlook for the US is going to be with Trump 2.0. Do you think investors have adequately priced for that level of risk? And do you think this kind of political upheaval, maybe some brinkmanship, is going to be a new normal going into the next few years?
I think that it's very hard for market participants to adequately or accurately price some of these political risks. Something that we've noted over the past few years, when Silicon Valley Bank failed in the United States in March of 2023, you had a market reaction, a sign of increased risk aversion in U.S. markets that was roughly 7 times larger than the market response to the February Russian invasion of Ukraine. So that's interesting. It's a market that is very sensitized to signs of financial risk, but is not yet, I think, proven able to precisely calibrate the sorts of political risks they're facing. And I think that's going to lead to volatile market activity, but also the potential for buying opportunities as you see market prices, valuations adjust down in response to some of these surprises, and ability to acquire at discounts relative to what was persisting prior to those events.
When you see upheaval in major democracies like South Korea, upheaval in places like France at the moment, where does that lead you to conclude? Is it sort of American exceptionalism when it comes to risk assets just continues going into next year? Do you look for kind of a lack of synchronicity when it comes to places like India or China instead?
Well, I think that we have to appreciate that U.S. assets are priced very differently than those in the rest of the world. And I think, again, this is related to American exceptionalism. Since that time that Silicon Valley Bank collapsed, U.S. GDP growth has averaged 3% annualized. You have U.S. labor productivity growth that has exceeded 2% on an annual basis for the past 5 quarters. So again, this is explained to a large extent by fundamentals, but at some point, the U.S. is going to hit a rough spot. And when it does, that is going to be a situation where the valuation ratios are so discrepant relative to the rest of the world that I think that there's going to be a very difficult period of adjustment as people realize that they're over-allocated to U.S. assets. That is not something I anticipate occurring in the next 6 to 12 months. So much of the U.S. growth is tied up in things like investment in data centers to train foundational and generative AI models. Of course, ongoing investment in reindustrialization, electrification, green industry. If you look at sightings, permits, investment intentions, this is not stopping anytime soon. But again, you have now this increased volatility as it relates to trade, potentially seismic policy changes. So I think that people do have to think about their portfolio allocations, and allocating to places like India, Asia, and the rest of the world more broadly is something that I think people have to really think harder about in 2025.
Jason, the headlines coming out of South Korea, TV Chosun saying that the ruling party there may ask Yoon to leave the party and that the ruling party chief may visit Yoon's office. So we're seeing developments already. You talked about how Korean stocks have been trading at a discount, and that has to do with the chaebol, the governance issues.
Yes.
You got to imagine, given the developments that we've seen of late, that discount is expected to expand.
I would think so. And again, I think that if this were resolved very expeditiously, that would be quite a surprise. This is a time where people should prepare for a few months of uncertainty about the political situation. But what has been very encouraging in Japan, starting in February, was I think the realization from the FSC and government more broadly that they need to emulate Japan. And so when you look at Korea and Japan in relation to the U.S. market, what you find is that there are about 4 times as many public companies on a per capita basis as in the United States. You also find the return on capital in the corporate sector is a small fraction of that in the United States. In both cases, it seemed related to corporate governance issues, cross ownership, And then you just also, again, too many public companies with that diffuse ownership base that aren't demanding changes, that aren't setting higher ROE targets. So I do think that there is an opportunity here in Korea as the political situation resolves itself, as there is more willingness to embrace some of these corporate governance changes, to have the same sort of dynamism in the market for corporate control that we have seen take hold in Japan, and the way that investor attitudes to Japan really changed almost overnight as they saw a genuine commitment on the part of government to get some of these governance issues right.
And there are also real opportunities for investors, you would imagine. If we see, a fallout in the assets, some of the assets are worth picking up, the likes of Samsung, SK Hynix, if you play along the themes of supply chains, for instance, and chips.
No, and I think that Korea has a very important role to play with the changed attitudes towards trade in the United States. This isn't simply barriers vis-a-vis the rest of the world. There is greater consideration for allies and a friend-enemy sort of distinction in the way that President Trump and the incoming administration is thinking about these issues. And Korea is very much on the right side of that divide. I would say also there's a lot of opportunities in private markets. Again, to the extent that you see this improvement in the return on capital and corporate governance, it goes hand in hand with delistings. Get some of these companies into the hands of new owners that have more ambitious plans for what to do with the assets.
How low might the Korean won go?
Again, it's hard to say. I'm very encouraged to see the bounce back this morning. Again, this is something that could be shorter lived in terms of the market volatility than we suspect. But again, I think it's a 2-month period is my guess. Where we have to monitor the situation very closely. Again, this is also coming in the context with the U.S. dollar that is probably 12 to 15% overvalued on a real basis relative to trading partners. And that's an overvaluation that actually could become exacerbated over the next 6 months if the Fed keeps rates a bit higher than markets expected. And then, of course, tariffs that generally lead to depreciation of the tariff-imposing currency, depreciation of the exporters.
Jason, you got to imagine there'll be ripple effects when it comes to the developments in Korea and how that may impact the rest of Asia, especially emerging markets Asia. What might we see, and what are the asset classes, perhaps even FX crosses that we should be looking out for? Well,
I think that this is going to help India further. India has been an outperformer in markets more broadly, but also the economy. And I think that it's very often these questions of risk aversion or risk premium, it's always on a relative basis. And I think a further narrowing of India, because of the solid growth, you have potential GDP growth of about 7%. That's around which the actual GDP has oscillated. But I also want to emphasize just how special India's current circumstance is in the broader geostrategic environment. They're simultaneously importing massive amounts of cheaper crude oil from Russia, as at the same time, they're also a main destination for FDI from multinationals, particularly in the United States, looking to diversify out of China. So I actually think, surprisingly, this is going to increase the allure of Indian assets in investors' broader portfolios and outlooks.
All right. There are always opportunities. Jason, thank you for stopping by.
Thank you.
Jason Thomas, Carlyle's Head of Global Research and Investment Strategy. Sherry, handing it back to you.
Yeah, as we continue to watch the repercussions around Asian markets, of course, with what's happening in South Korea. But surprisingly, we are seeing now the Korean won reversing most of its losses from the overnight session. We're talking about Korean won gaining more than 1% against the U.S. dollar towards that 1,400 level. And this, of course, after hitting that 2009 low. And already overnight, it was paring back some of those losses, given that authorities have pledged unlimited liquidity in the markets. We have heard from local media that the opposition party could be proposing a Yoon impeachment motion today. We heard also that the ruling party could be asking Yoon to leave the party. We are seeing the Kospi also sort of paring back those earlier declines. And in fact, the sector that's turned green right now is materials, gaining 0.7%. We have more ahead on the Asia trade. This is Bloomberg. The tit-for-tat between China and the U.S. continues, with Beijing imposing a ban on several materials with high-tech and military applications. This after President Biden's administration escalated technology restrictions on Beijing. China correspondent Min Min Lo joins us now from Hong Kong. Min Min, so what's being banned right now, and how damaging could this be for the United States?
Yeah, a number of metals, including gallium, germanium, antimony, and super hard materials are banned for exports to the U.S. Graphite is going to be under stricter control as well. This is an escalation of existing measures because last year, germanium and gallium had already been under stricter restrictions. They require special licenses to be able to ship them to the U.S. Now it's an outright ban. And of course, this is in retaliation for the expansion of the chip curbs that the Biden administration has imposed and announced on Monday. Now, what impact will this have? These are metals that are used in everything from night vision goggles to satellite to semiconductors. And you can see on the screen that China is by far the top supplier for dozens of these critical minerals globally. And yes, it is possible to get substitutes for them or source them from alternative sources, but it's going to be more expensive. Although, of course, when China bans the sale of these metals to the U.S., it's going to cause the prices to spike up. That's going to create more economic incentives for other countries to ramp up production. So industry players are saying that they are not seeing any near-term disruption because this has been well anticipated. Politicians have been building up national reserves and miners have been tapping onto new sources of deposits. But the U.S. Geological Survey is saying that this could cost the U.S. economy $3.4 billion a year. But this essentially is a warning shot fired by Beijing to the incoming Trump administration that China is serious about hitting back against any of these escalation of trade restrictions.
We're, of course, also looking to China's top leaders convening for the very high-profile economic conclave that's expected to take place next Wednesday. What are we expecting to see or hear in terms of policy making?
Yes, so we understand from sources that that is taking place next Wednesday and Thursday. So that's considered regular timing, which means that some of the rumors that have been floating around suggesting that meeting could be brought forward, that those rumors were unfounded. This is a top meeting where policymakers, including President Xi himself, will be discussing industrial policy, monetary and fiscal policy. They'll also be discussing the budget, the deficit target for next year, although the exact numbers will only be revealed during the parliamentary session in March of next year, during the so-called two sessions. So we're not going to get that level of detail, but still the readout from this meeting is going to be passed over by investors for any signal of what is occupying policymakers' attention. So some economists are expecting that China could raise the budget deficit to GDP ratio next year to between 3.5% to 4%, up from the current 3%, just to give more room for the central government to borrow to shore up the economy. And that's after that 10 trillion yuan package that's already been announced to address local government debt. So already we saw yesterday markets bouncing on the back of this news, reversing some of their earlier declines. And so expectations are high. Whether they will be met is the big question that we'll only find out next week.
Bloomberg's China correspondent Min Min Lo there. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how European assets are opening up when it comes to futures just coming online. We're seeing Stocks 50 futures. In fact, futures picture really just looking negative across the board. This even comes after we saw Germany's DAX crossing 20,000 points for as European stocks broadly saw an advance. This is the first time we've seen that milestone. It was a fourth straight session of broader gains for the region. That pan-European stock 600 rising by just under 0.5%, and some pretty defensive sectors like real estate, food, beverage, beverages and telecoms lagging amidst that broader rally. But we're really watching France, aren't we? And that stock underperformance looking like it could last well into 2025, this impending collapse of the government. The yield when it comes to France's 10-year government debt trading at the same as Greece's, really showing both the risk of political upheaval in Paris and perhaps also the limitations of what sort of regional impact we could see. That widening in bank bond spreads also seems a little bit more contained for now, but we are watching French lawmakers as they head to that no confidence vote on Wednesday. The far right, the far left expected to join forces. This is Bloomberg. Take a look at what we're watching when it comes to data just crossing the Bloomberg on Australia. This is the picture when it comes to third quarter GDP rising 0.3% quarter on quarter. The estimate was for a slightly stronger gain of 0.5%. When it comes to the year-on-year reading, also a miss, 0.8% higher. The estimate, consensus I should say, was a gain of 1.1%. So that sort of more subdued pace than expected in the third quarter. We had that sort of expectation potentially looking quite weak, but that we did have some strong population growth factors taking that into account as well. We have seen Australian bonds tracking a little bit lower ahead of the third quarter GDP numbers there, and so that not so much of an acceleration, I guess, sort of throws in to another aspect of what we could see from the RBA, where expectations for the start of the cutting cycle here in Australia is well towards the middle of next year at this point, and we are sort of looking to see whether that potentially changes, given, as we've witnessed so far this morning and across the past few days, just how much global volatility is coming into play and some of those regional growth concerns as well. The Aussie dollar is holding pretty steady at 64.72. A lot of gyrations when it comes to FX, of course, some haven demand there, given just the drama we're seeing in South Korea, Sherry.
And before we get there, take a look at how PMIs are coming in Japan, because PMI composite number, and this is the final figure, coming in at 50.1 for the month of November, turning positive after briefly dipping into contraction territory. PMI services also coming in into expansion territory of 50.5, and you can see the Japanese yen holding at that 149 level against the US dollar. Of course, we saw a little bit of a spike given all of the volatility and the risk-off mood on what's happening in South Korea. So take a look at what's happening in the broader markets right now, because we have seen now the Korean won gaining about 1% against the US dollar, sort of reversing all of those losses that we saw in the overnight session. The Kospi is still down, but we are seeing it a little bit paring back some of those earlier losses, but really suffice it to say that we've seen a lot of volatility in South Korean assets, especially overnight, when we had implied volatility for the won as well, spiked to the highest level since the U.S. elections. And the Kospi 200 volatility index at the moment also spiking on the news that President Yoon Suk-yeol decided to impose martial law, then reversed the decision just hours later, and the outcome is more volatility. We are trying to gauge what the broader global reaction is, and right now we're hearing from Secretary Blinken commenting on the developments in South Korea, saying that he welcomes the president's statement on lifting the martial law order, saying that they continue to expect political disagreements to be resolved peacefully and in accordance with the rule of law. It was interesting overnight, we heard from the White House that really the president hadn't been notified of in advance of what the president of South Korea was planning to do. Bloomberg Seoul Bureau editor Danny Thomas joins us now. So really this is not going to sit well with not just markets, but also with politicians around the world watching what's happening in South Korea. As I mentioned, the White House apparently wasn't notified about this. Now that the martial law decree has been lifted, what's next?
Yeah, hi, Sherry. So this has been a pretty dramatic turn of events last night. It was very clear from the get-go that the parliament will oppose it, and the reaction was pretty swift. I think what goes next is the future of President Yoon is clearly in question mark now. Even before this week's event, there was always he was deeply unpopular and there's been previous calls of impeachment. And what we have seen yesterday and this embarrassing reversal is only going to push more people into action and call him to impeach. So we are waiting to see how this unfolds, whether it's going to be an opposition party pushing for an impeachment or Yoon finding himself isolated within his own, perhaps, if not cabinet, close allies, trying to make way and find a new, leadership in Seoul.
That impeachment process, what do we know about it? Because it could happen quite quickly once it's reported to Parliament.
That's true. We haven't, there's been calls from the opposition leaders and others. We've seen editorials in the local media today demanding for that. So we haven't heard an official word, but you're right. If it goes ahead, it could be a pretty quick scheme. In the scheme of things, it might move pretty quickly. And we all are kind of prepared for that to see which way it swings.
Seoul Bureau editor Danny Thomas there. Let's get more perspective on the developing situation in Korea. Joining us now is Rachel Min-young Lee, senior fellow at Simpson Center's Korea program and 38th North. Thank you so much for joining us today. How do you expect the latest to unfold in South Korea? Because we're now hearing from the ruling party and local media that they could potentially ask Yoon Suk-yeol to actually leave their party. What happens next?
So thank you for having me. I think, so as you noted, the main opposition party is calling on the president to step down. We're seeing the ruling party trying to sever ties with the president, saying that the president should leave the party, trying to salvage what they have left. This is a developing story, but I think it's safe to say that Yoon's days as president are numbered. Again, with the opposition parties calling on the president to resign, if not, that they will be putting an impeachment bill in motion. And I think we will see that in the coming days.
I was in South Korea for the impeachment of then President Park Geun-hye and how the court decided to uphold that vote. How would the process of impeachment unfold?
Well, so if Yoon refuses to step down, and I don't think that he would, the opposition parties will put forward an impeachment bill. And an impeachment bill requires a 2/3 majority approval to pass the National Assembly. And only 8 lawmakers from the ruling party need to vote yes, and the bill passes. So when that happens, Yoon is suspended from his duties and the prime minister becomes the acting president. And the Constitutional Court then has 90 days to deliberate. And while the court is supposed to be apolitical, given the bipartisan outrage over Yoon's actions, I think it's safe to expect that the court cannot be unaffected by the social atmospherics. And if Yoon is impeached by the Constitutional Court, I believe that you have to have a presidential election within 60 days of the day that the impeachment is confirmed by the Constitutional Court.
Rachel, we're now hearing in just about 20 minutes or so, 23 minutes from now, that the South Korean finance chief has convened a ministers' meeting to take place at 10 a.m. local time as well. So there's clearly a flurry of activity, and we're waiting to see what sort of the upshot of all of this will be. But it sounds like in whichever direction, we should be bracing for a period of political uncertainty to come, particularly if the road of impeachment and an inevitable election might be that way.
Yes, I think that we are in a period of confusion, to say the least. Everybody was stunned. I think it was first shock, and then that was followed by outrage over Yoon's actions. And the problem here for President Yoon is that this outrage comes from all political parties, for the people as well. It's bipartisan, so across the political spectrum. So, you remember the political protests during the time that former President Park Geun-hye was being impeached. The candlelight vigils every single day. Hundreds of thousands of people took to the streets. I think we might expect to see the same happening in the coming days.
We're now hearing that Yoon's aides have offered to resign, according to reporting from Yonhap. So this is clearly a very, fast developing story with a lot of changes in personnel potentially expected, either willingly or, through the due process that we might see play out. We've spoken a little bit about sort of how shocking and disturbing this has been from people that have watched the plight of democracy in this country, right? Do you think that this endangers that in any way, this sort of risky, shocking political move? Is that something that we could potentially see more of?
Luckily, so from the time that this, situation began with President Yoon issuing a martial law decree to the time that he lifted it, that took about 6 hours. I was a little bit concerned that maybe he may not lift it despite the National Assembly's annulment of the martial law. That would have then forced, President Yoon to have to comply. I was afraid that he may not comply, but he did. So I think on that front, we can be assured that there will be no more turmoil. But now that this has actually happened, there's no rolling back. There's no going back, right? So, the bigger question to ask now is what are the implications of this for domestic politics, for foreign policy, U.S.-ROK relations?
Are you expecting some saber rattling from North Korea now that it seems there's chaos in the South?
We may see some kind of reaction. It's kind of hard to tell because back in 2016, when then President Park Geun-hye was being impeached, North Korea was sitting back, with a big smile on its face, a lot of commentaries, a lot of satire, a lot of sarcasm. Every day, there was a barrage of, articles and commentaries from the state media. Since then, these days, North Korea doesn't seem to be that much interested in South Korea ever since Kim Jong-un announced the two Koreas policy. If we get reaction, we get reaction. But I don't think that we should expect North Korea to do anything disruptive, such as carrying out a major provocation, because it doesn't have to. North Korea can just kind of sit back and see what happens.
Rachel Min-young Lee, Senior Fellow at Simpson Center's North Korea Program and 38 North. Good to have you with us with your perspective on the political moves happening in South Korea. Let's get the market reaction with Bloomberg MLive strategist Mark Cranfield. Mark, it's been really interesting to see the reaction in the markets because the Kospi, the Kosdaq stock markets are still down, but the Korean won is now turning positive, is actually recouping most of last night's losses.
There's a lot of knee-jerk reactions, as you say, with all those. The most surprising one is the bond market. Why the Korean bond market is down doesn't make a whole lot of sense. Obviously, there's some panic selling, people just, I need to be out of all Korean assets. But if you think it was just last week, the Bank of Korea surprised with an interest rate cut.
Rate cut.
And they're quite possibly going to add more early in next year. In fact, if the situation doesn't stabilise quickly, there's always the chance of an emergency rate cut to help to calm down investors. So the bond market will probably be one of the quickest to recover, as the Korean won is doing as well. But what people will be watching closely is the Korean won crosses, not so much against the US dollar, some of that is out of their hands. But the authorities especially will be looking how it performs against the yuan, how it performs against other regional currencies as well. They want to see stability in those cross rates, and that will reassure them that people are still convinced the Korean won is a good currency. So yes, we're going to see a lot of changes there. Even the relative value of the Korean equities, they've been underperforming the broader Asian market for some time. And this just may draw attention to the fact that actually on a long-term basis, Korea looks relatively cheap compared to the rest of the world. So yes, for now, there's a lot of noise, there's a lot of action, but it's drawing some attention to some possibilities in Korea here.
Relatively cheap, but there's a reason that investors have been wary, right? As you said, we had that rate cut from the BOK, the second back-to-back one, or the first back-to-back one since the global financial crisis. Does this give you an indication of the challenges that South Korea faces?
Definitely. The projections are that it's not going to have a great year next year, but if you get your rate cuts in early, before your competitors, then of course there's a chance for a quicker rebound. And equity markets especially discount the forward probabilities. So if they get convinced that the Korean authorities are doing the best that they can to try and turn things around, you may actually see Korea get ahead of other markets in Asia and start to do a bit better. Of course, we're talking about a medium term here. It's not all going to happen today. But sometimes it's these kind of things. It's the publicity. There's no such thing as bad publicity. And Korea is getting plenty of news today. It will last for a little bit longer. People will have a chance to reassess what is really going on there and is there relative value in those markets.
You know, the Japan equity success story and the final, ability to stage that turnaround have had a lot of people optimistic that maybe neighbouring Korean assets with so many similarities could tread that same path as well. Does this set that expectation back a bit?
Well, Japan is obviously in a somewhat different situation. The Bank of Japan is fully expected to raise interest rates, and probably even just in a couple of weeks' time. So that brings a little bit of a hurdle. Although Japanese companies have shown that they can they can engage with a higher interest rate. And even if rates are rising, it's going to be something like 1% is probably going to be about the max we're going to see in Japan. So that's something that most companies can accommodate anyway. The yen is stabilizing as well at a relatively low level as well. So Japanese companies are thinking that the yen is going to be somewhere in the 140s on a long-term basis. That makes the yen very competitive against other markets as well. What would be damaging for Japanese companies if we see 120 in terms of dollar yen? That's something they're probably not prepared for, but it's not look as though it's going to happen just yet. But certainly, if you compare the relative situations, Korean interest rates probably coming down, Japanese going up. Some people will start to think maybe it's time to switch back to Korea.
Bloomberg Analyst Strategist Mark Cranfield here with a look at Korean assets. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at what we're watching when it comes to Aussie equities, as well as how Australian bonds are faring as well. We are seeing that equity section just seeing some modest losses, down about 0.5%. This is, of course, a market that has been trading pretty close to record highs there, and that's a trajectory when it comes to Aussie bonds there as well. We did see the GDP numbers coming through just in the last 15 minutes or so, growth missing estimates in the third quarter. Clearly still some pressure when it comes to household spending, as well as that cost of living crisis as well. So a pretty subdued growth in those 3 months through to September. Let's bring in for some analysis. Bloomberg Australia government reporter Ben Westcott joins us for more. So Ben, this, does it do anything other than kind of solidify the view that we are still seeing a lot of households and a lot of, spending coming under pressure here?
Look, this is a big miss for these numbers. They were expected to be 0.5 and 1.1 for the year to September. Instead, we ended up with 0.3 and 0.8. So, those are big misses. And even though that is the strongest growth for about a year for Australia in terms of quarterly terms, it still is much off what you'd expect to see at this time. And you saw that from the Treasurer, Jim Chalmers' comments right afterwards. He said that this proves that the economy is weaker than economists think. Basically, the only thing that is keeping Australia out of recession at this point is public spending, more or less. They contributed about 0.6% of GDP. And without that, Australia would be, rather than in a per capita recession, as it has been for 6 quarters, it would be in a genuine recession.
What does this mean for the RBA?
Well, they're going to come under a lot of pressure now to reconsider their rate cuts forecast. At this point, there's no rate cut forecast until May, pushing back earlier expectations of a February cut potentially. But if these numbers continue in this fashion, if inflation stays low, then there will be more pressure on the RBA to cut rates sooner to stimulate the economy and avoid a hard landing for the country.
And perhaps, more implications as we head into the next few months where we will see an election being called. What's the situation here when it comes to the Albanese government and how they can kind of, characterise this economy as they go into that vote?
Yeah, I mean, the opposition is really going hard on this idea of the per capita recession. As I said, it's been 6 quarters in a row now where GDP has been negative per capita. As far as the government goes, they are in a tough position because they had been really hoping for an interest rate cut ahead of the election due by May next year. And the way things are looking, they're not going to get that at this stage. So that combined with weak growth and the fact that they can't really spend very much money in an election campaign, always a difficult thing for the government because of already large deficits and already high inflation, that does put extra pressure on them. The only silver lining for Jim Chalmers might be that potentially this will encourage the Reserve Bank to take another look at an earlier rate cut, which could revitalize the economy. But at this stage, it's pretty much all bad news for the Albanese government.
Bloomberg Australia government reporter Ben Westcott there in Canberra. More ahead on the Asia trade. This is Bloomberg.
Take a look at some of the big moves in the South Korean session today. Of course, we have the Kospi losing ground by the most in about 3 weeks, and some of those big movers at the moment, including Woori Technology falling the most in 4 months. POSCO International down by the most in 4 months as well. We continue to see the downside pressure with the volatility index, as you can see right there, spiking this as the South Korean president declared martial law, then reversed the decision just hours later. We're hearing from local media that the president's aides have offered to resign en masse, and you can see the biggest stock on the Kospi, Samsung Electronics, down more than 1% as well. Of course, given South Korea's importance when it comes to global supply chains, we'll be watching those exporters very closely. POSCO, a big steelmaker as well, down more than 10% at the moment. This, as we're hearing from local media as well, from TV Chosun, saying that the South Korean ruling party may ask Yoon to leave the party. We have heard really the reaction coming globally as well, with Prime Minister Ishiba here in Tokyo speaking right now, saying that they're watching the South Korean situation with a strong interest, and there's nothing concrete decided on visiting South Korea. Prime Minister Ishiba here in Tokyo speaking at the moment, saying that he's not in a position to comment on South Korea's internal affairs. This, as we've already heard from Secretary Blinken in the U.S., talking about watching the situation in South Korea very closely, and that they're glad that that martial law was also lifted. You can see the Kospi losing 1.5% at the moment, as the Japanese yen is also losing ground against the U.S. dollar. But really, Heidi, it's all about these haven assets, right? How they're reacting to the volatility coming from South Korea, as we're headed towards potentially an impeachment motion being moved today by the opposition party, according to local media.
Right, and that could move very quickly, Sherry, right? It could just be a frenetic pace if that does happen, if it gets reported to Parliament. But by tomorrow, we know that from there, it could be only 24 hours before a vote takes place. At the same time, we're also hearing reporting from Yonhap that Yoon's senior aides are offering to resign en masse over the martial law declaration, citing sources at the presidential office. We've seen that international reaction to the United States through Antony Blinken, saying that they're closely watching these developments. They expect political disagreements to be resolved peacefully and through the rule of law. So we continue to watch these developments in Korea. As we know, at the top of the next hour, we'll be seeing that convention of ministers gathering for a meeting as well. So watching to see what comes out of that. In the meantime, this is a picture when it comes to Korean assets, as well as looking ahead to the open of trading across Greater China. This is Bloomberg.